Okay, guys, so Cardano has fallen back a little bit over the weekend. We saw an initial push up a little bit early Saturday, so this is 0200 hours yesterday. We did see a bit of a pull to the downside by about 5.15% early hours on Sunday here at 0300. This is actually pretty much in line with our kind of rough expectations in the previous technical analysis video that we put out on Friday, which was to test out some of these lower ranges here. Okay, so obviously on the lowest side, we had the 76.93 to 77.56. On the kind of mid-range around the 200 exponential moving average, which is where we've come down to at the moment, that sits between 77.37 cents and 78.16 cents. And then we have the upper area of resistance that we were hoping to turn to support, which hasn't happened, coming in at 78.26 to 78.80 cents. So as it sits right now, as you can kind of see, our stochastic here is heading up towards this overbought area. We are looking for rejection from our 50 EMA, 50 SMAs, okay? And that's coming in between, the 50 EMAs at 79.08 cents, and our 50 SMA, the yellow line, is coming in at 79.75 cents. So there's a couple of different ways that we can kind of trade on this. I don't like the idea of shorting the market, so it's one of those that you'd have to be really, really kind of cautious on. If we do test out some of these areas, we might be able to get a profitable trade like this, for example, where we find rejection off the 50 EMA, stop loss above the 50 SMA, and look for take profit on the support of the 200 EMA. This is a 1.58 risk reward ratio. It's a good one. I just don't think I want to be shorting ADA in this current market condition at the moment. And the reason for that is primarily the fact that I'm looking at momentum shifting upwards, and we are likely to see a continuation of this run to the upside. Okay, now if we take a little bit of Elliott wave here into consideration, we can see that there is, well, minimum expectations have already been met with the wick high that we had yesterday at 0400 hours coming in at 81.41 cents. Well, from that, we are looking and we're looking for a low range of 76.38 to 77.31, which we've obviously tapped into already. So this one is pretty much kind of cooked as far as I can see it, from a kind of corrective pattern to the downside, coming in like this. And well, from here we can be looking for those reversals. Now it's possible, of course, that this is in fact a 5-wave movement towards the end, and it's actually more of a larger kind of correction pattern. But I don't think that's really what's going on, considering our 3 waves up this side as well. So what we've got going on is something to this effect, and then you've got this kind of correction coming in down here as well. So to me, it does look likely that we are, and we also are bridging that kind of gap of overlap as well. So we're not too concerned with that. So basically we have wick lows coming in over here on Friday, 2200 hours UTC. That low was 78.91. And over this side here, we can see we have 78.93 creating overlap, 78.91, basically double or the same level here, support turned to resistance. So it's not likely, in my opinion, that we're going to have a big sell-off here. I think actually there's going to be a flush out to kind of liquidate people and then a big kind of reversal. So to me, the market looks more primed for long positions, but we want to kind of stagger those in a little bit lower, because I do think we're going to come back into these lower ranges. If you're down in the Discord server in the profit pit, you'll know that I have already gone long on ADA. You'll know my stop loss and my take profit ranges, etc. But if we were not in here yet, we would be looking at potentially coming back down into these low ranges around the 200 exponential moving average. We would want to put the stop loss lower than the previous wick lows that we had over this side. I'll draw a little horizontal line on there. So that low was 74.48. Our stop loss must be lower than that, so 74.3. And then we want to target out at least 1.5 on that risk reward ratio. In doing so, what that's going to do is it's going to give us this area, this upper area here of previous resistance, but I still see us moving out more towards the kind of 83.87 to 86.78, and even that is going to be a precursor to larger moves on a larger time frame. Okay, so that's going to be the kind of the idea here. Now, if we take a look at it from a 4-hour standpoint, you can see here that you're finding support on the 50 SMA, or 50 EMA, sorry, and you can see that that 50 SMA is still quite low. So I can't rule out the idea that you're going to have some kind of liquidation event where the price just plummets here very briefly, and you end up with a basic wick that comes down here, and then basically we bounce all the way back up. You get your body of your candle way back up here again, for example, right? This kind of liquidation event happens because of market makers, exchanges, and basically poor liquidity in the order books that allow for manipulation. This is kind of what happened with the previous moves to the downside, where all those orders were removed from the spot order books by market makers, and as such, the price dropped all the way down here, dropped all the way down to 50 cents, right? That is because there was a lack of liquidity in the market, and this kind of wick is something that we can see on a smaller scale potentially playing out over here. Okay, so we can't rule that out, which is important to have the stop loss in the right place, and you could argue that maybe you can get a push out towards 85 cents for rejection from the the 200 EMA on the 4-hour time frame, if I can talk today, which will give you a bigger kind of risk reward ratio. Okay, so it's an interesting one. Momentum wise is looking for a shift to the upside. Okay, so support is being found as it has done already, and we could potentially be looking for another move to the upside here on the 4-hour time frame. If we bring in the relative strength index, we're now above 50. That's a bullish sign, and the MACD histogram here has been showing weakness in all of this as well. So you did have some bearish divergences being noted here, but outside of that, everything is now actually potentially on the cusp of another break to the upside. Don't get me wrong, it still might lead us into more bearish divergences. What we have with that is higher highs on your price, but lower highs on your histogram. If that's something that we see, then of course we want to be shorting the market from the 200 exponential market, EMA, because that's going to be the right thing to do. Bring this to the 1-hour time frame, you can see this kind of building up in a little bit more detail here. So in this particular area, you can see that there is actually bullish divergence forming here as we have lower lows on our hourly time frame. Let me just zoom in on this just a little bit so you guys can see. So we have obviously lower lows on the time frame for price action, but actually at the same time you have higher lows going on here when it comes to your histogram. So that's kind of showing us that we are likely to see a reversal, and so that's why we think long rather than short. But of course I could be wrong. We could hedge the bets if we do see clean rejections of that 200 EMA, when we could potentially short a little bit lower if we needed to, but the stop loss and the risk management is all there for a reason at the end of the day. Now, if you want to gain access to what I am personally doing, then you're going to want to check out the Profit Pit. The Profit Pit is free. It's in the Discord server. All you need to do is join the free Discord that is linked in the description and basically be trading actively on one of the exchanges that we use, 𝗕𝗘𝗪𝗂𝗋, etc., using one of the affiliate links in the description. It has to be on one of our affiliate links. Basically what that does is it allows us to essentially pay for the service. So if you can do that, then you can join us in the free Discord server, and then basically see not just my personal kind of entries, exits, stop losses, risk management, leverage and all that, but also JB and Chris and what they are doing in the space as well. Well worth checking out, guys. It's linked in the description for the Discord, and of course all of the different exchanges, 𝗕𝗘𝗪𝗂𝗋, MEXC, Bybit, etc. Right? Okay, cool. So that gives us a bit of an idea then on our small time frame stuff. Let's roll this up into a daily time frame, because obviously the bigger macro picture is quite important. And well, it doesn't really look likely to have changed all that much. Okay, we have our 200-day exponential moving average holding as our key areas of support. The concern is going to be that we have a continued move to the downside here, but based on this wick and this reversal to this wick, I'm not expecting that to be the case. I'm actually for a bigger break to the upside overall. Okay, now if I zoom out far enough on this daily time frame, you can still see that what we are tracking here is that potential wobble. Obviously, I don't think it's something that is likely to happen now, but we did tap into the 50 cent area, which basically has already kind of confirmed our low area here. So we don't have to come down any deeper. We can still remain above the 200 exponential moving average, which is currently 72.6 0.67 on the daily time frame. We are looking for that next big run to the upside. The kind of 1.618 trigger point for our diagonal pattern, ending diagonal pattern, is $9.25.5. That's going to sound crazy to many, but that is the target range that we have scoped out for essentially our diagonal pattern. Now, why a diagonal pattern? I've said this a couple of times. Diagonal patterns are usually going to be in C wave positions or in a wave 1 or wave 5 position. Okay, those are usually the two. So the only real two spots that they can really appear in, or three spots they can appear in: wave 1, wave 5, or wave C. Now, you might find them in wave Bs if they're inside a wave C, or inside a wave 1 or a wave 5, but ultimately wave 1, 5, or C. Now, with this, we have 5 waves from 2020 into 2021, which means C wave must be 5-wave pattern, and we only have a 3-wave structure at the moment. Now, there's a couple of different ways that this can go, some super bullish ones and some conservative ones. What this $9.25 is actually somewhere slap back in the middle, to be honest with you. This is under the premise that you have a ending diagonal based pattern, which basically is a series of 3-wave patterns. So you have your ABC up, you have a move to the downside, we then look for another 3-wave pattern up towards $9.25, correction down, and then another move up. Now, this can span quite a bit of time, doesn't have to happen all in 1 year. That's one of the problems with Elliott wave, is you can't time the market. It could be that $9.25 is our bullish peak this year, and we have a bear market for our wave 4, and then the next bull market is our wave 5. Okay, now in that particular regard, there's other kind of patterns here that could play out. We have the contracting diagonal, which basically would be one that would fall short. Okay, and then have some kind of really weak kind of bullish market like this. And then there's the more bullish one, which is the expanding diagonal, which obviously is that you have it expanding out over time. Might not hit 1.618, but you have something to this effect, right? Really, really big and explosive movements. But ultimately, it's a diagonal based on these patterns. The alternative is, of course, that we've nested in a wave 1, wave 2. You have some kind of really big wave 3, 4, and 5 like this, and this all gets nested inside a wave 1, wave 2, wave 3, wave 4, wave 5, and so forth, right? So on the conservative side, $9.25 seems to be the most conservative. On the low side, we're still talking about $4 to $5. So nothing much has changed. The pattern is a little bit annoying because obviously it means that there's going to be a lot more volatility with the price action, but it is what it is, and everything is still working out quite nicely. As I've said before, getting a long position on the daily time frame, I do have a long open on the daily time frame. This one has no liquidation price to it, no stop loss associated with it. All I've done is basically open up a position and add leverage so that it has a 0 liquidation price, and basically I'm going to sit in this one through the course of the year. But yeah, guys, I think that for now, Cardano is in a pretty good position. You can, of course, see here some bullish divergence. So as you can see, we had lower lows on that price action, but whilst you had lower lows on the price, you have higher lows on the histogram. So again, you can see the daily time frames looking quite good. And in fact, you can also take into consideration how our volumes on the positive side of the histogram are also decreasing. Basically, this is building up into a bigger breakout situation. So basically, yeah, I do see this one really starting to go up and head towards new all-time highs in the coming months. But yeah, for the most part, I'm not concerned about the price action as I see it today. I think it's huge opportunities, as we have said many times before. Okay, guys, that's going to wrap up today's technical analysis. But if you have found it useful and informative, smash that like button. The more likes we get on the videos, the more that the YouTube algorithm will push it out to more like-minded individuals and spread the word about Cardano. So let's get those likes up. And if you want to stay up to date with the latest news and technical analysis when it comes to Cardano, make sure to subscribe to the channel. And guys, if you haven't done so already, you're going to want to check out that video there. It's got some really interesting kind of points of view when it comes to the latest news on Cardano.